Welcome to the show, everyone. It's Lark, and I'm super excited to have on today Tio from the Arcane Bear. Tio, how's it going?
I'm doing fantastic. I just got back from swimming in the ocean in Costa Rica here and happy to go over some really cool, exciting chart stuff with you today, Lark.
Fantastic. Fantastic. It sounds amazing. Warm swimming in warm water. That's something we don't get a lot here in New Zealand. Now, we're going to be going into a really important educational video for you today. We are going to be discussing how the whales, how the market makers play the markets, because you have the choice in this market. You can either be whale food, you can be plankton, and I know you're not plankton, you're a person, remember that. But you can act like the remora. You can see what the whales are doing. You can see how these market makers are operating and benefit massively. So what Tio is going to be sharing with you today is called the Wyckoff method. Now, this is a very, very interesting way to interpret the data on the charts. We've seen some massive pumps recently. Tron is up like 100% today or something like that. Well, that was predicted in the Wyckoff method. We've seen lots of different pumps of 3, 4, 500%. Absolutely crazy stuff going on here. And using this method can help you identify what the market makers are doing, what the whales are doing, and be able to ride on the back of those movements and get some great gains. So not only are we going over in a very educational way how to use this method, but we're also going to be sharing some trade setups for things that are looking to hit those breakout points in the coming weeks and months. So make sure to stick around. This is going to be a great, great video. Now, Tia, I'm going to hand it back off over to you here. Let's start off with what the heck is the Wyckoff method, man?
Perfect. What a great introduction, Lark. I really appreciate that. So I'm going to full screen here. You should be able to see it says, what is the Wyckoff method? It's a great question. So Wyckoff actually is a person. His name is Richard Wyckoff. He was a trader from the early 1900s. And after he had seen so many retailers getting fleeced in the market, he was like, okay, I want to figure out a way to teach everyone and share everyone what I've learned. So this phase study goes over at long-term accumulation zones. Once he realized that the market was made up and by the movement of these whales, the market operators, or what he liked to call the composite man, these people build systematic campaigns that can last usually around a year, 6 months to a year, where they'll just accumulate, and they build this footprint, or as you were saying earlier, the wake of the whale. And what you want to be able to do is follow that wake. And the large market interest have not changed in the last 100 years. So we aim to do the same thing that Richard Wyckoff did, was bring this information to the average retail trader and help them hopefully not get fleeced in these early times. So we like to have fun at the Arcane Bear. So I was like, I want you to Wyckoff. I thought it was pretty funny. The comp man and how he always wins. So this is
Hey, can I just say real
Richard.
quick to everyone listening,
Yeah.
before you dive into that a bit more, just for everyone to know, I'm going to have a link down below in the description and in the comment section where you can join the Arcane Bears channel. He's got a fantastic channel where he's sharing this kind of information all the time, all kinds of new Wyckoff setups. So if you like what you hear today, you got to subscribe to his channel and check out what he's sharing, because it's really, really awesome information. Okay, sorry, just got to get that in there real quick, Tio. Go ahead, continue on the Wyckoff.
I love that. Thank you. So this is a quote from Richard Wyckoff that I really liked. And I think it summates one of the things that's really hard to grasp here. It says all the fluctuations in the market and the various stocks or crypto should be studied as if they're the result of one man's operations, or one person. We can call him the composite man. I like to call him the comp man, who in theory sits behind the scenes and manipulates the stocks to your disadvantage if you do not understand the game as he plays it, or to your great profit if you do understand it. So this is where we're going to get into some of the nitty gritty and really trying to identify the aspects. So a lot of this is made up of market cycles. Part of understanding, are you in an accumulation area? Is it oversold? Or is the market in a distribution phase or an overbought? Now, this is normally clearly identified by like the, oh yeah, buy low, sell high. It's like, it seems like, oh yeah, of course, that would be so simple, but it's not a simple walk in the park. It actually takes a lot of strategy and forward thinking, because you need to operate against human nature. This is a game, and once you know how to play it, it's a game of understanding human nature. So according to this style of trading, markets can be looked at again by this supply and demand chain. So as we learn about how the whales or composite man is moving these markets, he trades his position, and we can observe his activities of these highly successful market operators, these pools that have basically dominated these sectors, and we can decipher their footprint. So this is an idealized and kind of conceptualized schematic of, again, the accumulation area at the bottom and the distribution phase at the top, just a simple waveform. So what this allows us to do is, as we identify it properly, it allows us to find out where market man is and take basically an actionable trade that gives us the minimum exposure time with the maximum amount of gains. So this supply and demand character, obviously the law of supply and demand is so important. If there's only so many of a certain type of thing, if I want to buy it and there's less of it being sold, then we're going to run the price up. So again, this is one of those simple things where when supply is greater than demand, prices fall, but when demand is greater than supply, prices will rise. Now, again, seems simple, buy low, sell high, but mastering the relationship of this requires practice. So the law and cause of effect here, what we want to use is our ability to find these minimum exposure times and the high reward potential. So it's the law of effort. Can we get into a trade within 2 to 3 months before it blows up? So this is kind of what we're trying to answer with this. And we move into how we identify these as a trading range. So
I just want to say real quick too, before we go into that,
yeah,
I know a lot of people out there in the audience might be thinking, "Wow, I'm not really a trader, Lark. I don't know if I really need this kind of stuff." Like, if you're an investor, you're just trading on bigger time frames. I think that's the thing we got to hit home here. If you're trying to buy low and sell high, right? That you might say, well, it's going to take me months. I'm not really a day trader or anything like that. Day trading is insane. It's a big waste of your time in a lot of ways. But longer time frame trading, which is exactly what this is, when to get good entries, when to get good exits, right? So this is a method that investors can definitely use to time good entries. So you're not buying the top and selling the bottom. You are buying the bottom and selling the top. Okay, go ahead, Dio.
Yeah, no, it's a great point you've made here that these are long time frames. So currently we're going to go over the trading range for Tron, and this started in July. I shouldn't have cut the date off, but down here is July. So we basically have an entire year of an accumulation zone. This looked like a double bottom. We charted it a little while back, but I wanted to show you Tron as it's already kind of blown up out of this backup phase. So this phase A here is built up of your first preliminary support, followed by a selling climax and an automatic rally to the top of the trading range. Then you usually have these secondary tests, which go into B. So as we move on to B, what you see is this secondary test of the range itself. In the center, we have this red line, which is called our point of control. So we see another like 4 or 5 months into this trading range where we're still respecting this box.
So the midline's kind of, that red line's basically like the midpoint between the top of the supply and the demand zones, right?
Yeah, so the red line, the POC in our volume profile, represents the area where there's been the most amount of buying and selling for over this entire range. So even though it's gone up and down, the majority of the selling was all along this point of control. So this is usually how the whales follow their, I guess, where they are in the territory of their play. So the spring part here was the pandemic. Effectively, if you go back, we can look at tons of trades, and we'll look at a few more of these. The spring all happened between March and May. These were the final capitulation points where everybody in the crypto market was basically readjusting their portfolio to potentially make it through the next 18 months of supply chain problems, liquidity difficulties, and just needing the money to operate as a business like great. So this spring happened here. This is phase C. This is our final selling climax. This is important because this is where the market, it looks like it's signaling a downtrend. Again, this is probably like a 40 to 50 day downward spring. Now the phases D, which is we're going to look at now, this is the most important area to start to pay attention to these trades. And they're probably the most exciting to initiate small entries and kind of stake your flag in a trade to get your interest or your investment in something. Now, none of this is investment advice, but what we can do is help you clearly identify if you are looking to make an entry in anything. These are the best ways to find that, because once you know Market Man's footprints, both D and E are going to become very, very important parts for you to recognize, because they can save you that entire year of like being dragged through the mud where you bought back in 2018 and you're listening to everyone say hodl and it goes down and you're down 30 to 40% in your position. And then the first time it goes up, most of the retail traders start selling here at a loss to jump in the next hype thing like band or whatever else is going on. Meanwhile, missing the potential that's about to come in Tron next, which is this phase E. So phase D is characterized. Oh, how do I go back? I don't even know how to use these things. So here we go. Phase D is characterized by this high demand and minimum supply. So this is the test and the LPS area. So that we see widening price spreads in the volume indicators, and these SOS patterns are observed where you shoot straight up to the top of the box here. These are, again, good places to add to like early initial long positions, but don't go in heavy. Like, remember that market man, you want to learn to think like him. He's got infinite money and infinite time. So over the 90-day period of this D phase, he doesn't just spend everything he wants to get in on Tron that one day. You'd be like, great, I'm going to put in, maybe let's say I've got a capital bucket of $1,000 to get all the way to the phase D. I'll buy 20 or 50 bucks a day to kind of stake my flag. I'll go and I'll buy another $100. So a few days later, maybe 300 or 400 bucks. Then you just start building a small position through D, just enough to keep your attention, because phase E is the really exciting part. So when you get to phase E, this is where you, after the SOS starts to decline.
Now, what is the SOS?
Phase. Yes, thank you. So back in phase C here, you have SOS. And SOS is kind of a mix between phase D and E effectively, and it stands for a sign of strength. It's when the market operators just start to buy, and they buy through an entire wall really easily without, like, maybe they move 15 Bitcoin to spike the price up like 30 to 40%. So this sign of strength is a real clear indicator that you want to be paying attention, because phase E is the really exciting part. Now, obviously, Tron worked out really, really well. So some of the next ones will show you where the backup phase has actually gone lower. So you want to be very, very patient with the backup phase. Most retail traders would be really good to pay attention to their entries here, because this is ultimately the least amount of exposure time with the maximum amount of risk coming out of the box. And when you see the move of this out of the box, you see 100, 300% gains quite frequently. So one of the things I want to do next is going to take you over a more live sharing version of this. So I have to press stop and kind of jump over here one more time. So again, the importance is to remember that these are kind of fractal-like in nature, Lark. So you never see them identical. Like out in the wild, they always have a little bit of a different characteristic depending on the strength or the value of some of these markets. So what I've got open here is our
it's a pattern of human emotions. I mean, you can compare it to I don't know, like a forest or something, right? All the trees are different, but they all are kind of the same trees. You know, they're all oak trees or whatever, but they all grow different. They all have their own unique characteristics, but they're all going to play out most likely in a very similar fashion. Some might not, but most will.
Yeah, some will do better than others. That's the real kicker. Mm-hmm. Some of these will do much better than others in the terms of the gains that you can get outside the box. And this is what we'll go over next, is kind of how to look for profit targets and stuff like this too. So here I've got Tron. We originally posted this in July 24 because we were getting into phase D, and I'm interested in these long-term plays. Again, if we look at Tron, we can measure phase D here was approximately 66 days, right? So it's super boring for most people to want to try to build a position for 66 days that does nothing but go up and down for 20%. And then
the market's based on fast gains, man. And it's crazy because, as I so frequently say on the channel, the biggest gains come from getting into positions, holding them for longer time periods, right? And this method just absolutely proves that is true. Right? So it's, if you want to do that, okay, I'm going to make 100% overnight or something. Well, yeah, you can go gamble, right? And a lot of people are making money gambling, right? That's fine. But if you're looking for those more consistent wins, something like this is how you get there.
Yeah. Well, this is how Market Man plays his game. He knows that once you get into these final areas of the backup point, you can hike the price up 100% here with very little cost to them, because they've acquired all that supply, and all the weak hands have been shaken out. They've been moved back into Bitcoin, or they're trying something else out. So Market Man has total control of the supply. So once he starts buying, he buys everything up without even a hint. You see a 100% move out of the box in less than 4 or 5 days, effectively. Right. So let's, we look at it. So we've got a private group where we teach stuff like this, and Lark, I decided too that anyone that wants to, if you go to the links down below and you join and you use the code CRYPTOLARK will give you a 50% discount on the monthly subscriber, monthly membership. And again, 100% no questions asked, money back guaranteed. So if any of you guys do join and you're not happy, we'll just give you your money back. We've got over 400 members now. Everyone's really happy. Lark's in there with this too. This type of education is my favorite because it works really consistently. So see here with Tron, we saw that blow up from July 24th. Very, very nice move. Now let's go over a few more of these really quickly and talk about some of the ones that are coming up. So here we see Binance. I'm a big fan of the Binance token, fundamentally speaking. I think that they're going to be moving into the DeFi space. They just announced the new Binance Smart Chain that has faster, cheaper block times than Ethereum. Not that I think it's going to kill Ethereum, but Binance has enough of their own ecosystem to make it work for their own. They're moving into the decentralized index.
Just wait until yield farming on Binance chain comes.
Yeah, exactly. And you can likely stake the Binance token as liquidity token and be rewarded in the other projects.
If you don't think they're going to do this, you're not paying attention to the market.
Yeah, exactly. So in Binance token, I started building my position in this test area, right? Again, these are not building plays like this are not for the weak hands. You need to be strong through this period because I spent 45 days building a position before we saw our first 12% spike out of this downward trend, right? So it's a very beautiful break out of the trend. So now, again, you need to have that patience to get to the backup phase or get really good at finding these. And that's what we're trying to help identify with our group is how to get in right at this last bit. Because most people don't have building a campaign like this is great if you've got $1 million you want to get in each of these, because then you can just pile in, and anywhere in this range is good to you because you know what's coming next. There's these big 100% markups outside of the box. So Binance is one of the ones that we just posted recently. But more interestingly, let's go over Waves. So Waves was one that worked out really quickly, and you have this ascending gradient bottom. Here was your backup phase. It only lasted 20 days in this backup phase, and before you saw a really big explosion in price up to our first profit target point. Whereas something like Algo had a really big fake out here in D, and it came up to the top of the box and then moved all the way back down to the box again here. So my first profit targets are always around 30% outside of the box, and that's where I try to move my initial capital effectively. And then it usually comes down, and I try to rebuy back in. Now I've actually started to get into the habit of moving more out of my initial trade. Like if I bought in the test and the LPS ranges, I'm now actually getting closer to 50 or 60% of my this 30% top I liquidate, because the backups can be so long and quite arduous here, right? So we can take another one where we saw that same type of idea. If you look at WAN here, we saw our LPS started to go. We see a nice break to the top of the box, and then move out to that 30% target. So this is a really clear area where I like to kind of close my initial parts of my position and just let the rest ride, because these things become explosive. It's just over time, right? So you need to have that patience game play through. Otherwise, you might get stiffed on part of the trade. Like for instance, with Quantum here, one of the trades I've been building into, the LPS phase actually dropped back down before shooting up out of the box, hitting the 30% target, not the 45% one, and then coming back to the top of the box here. So these LPS phases, recognizing them are great because you get the time to get into the SOS, but the real money play is when, just like we were looking at with Tron here, is when you get up into what's called these backup phases. So I'll just open Tron one more time as kind of a comparison. I've got a bunch charted here. I just want to highlight some of the specifics. Where did I put Tron?
Right up a little bit.
Oh yes,
there it is. Yep.
So with Tron, the backup phase didn't last very long. It was only down for maybe 20 days, right? So if we go back over here and we take a look at Tron, this is the area of identification that I think most people want to get into, is making entries here. Right as you see the character shift and start to move up again, you see a break out of the box, and the break out of the box is worth way more than anything you got into into the D phase, right? So even if you made your entries into the D phase and you hit your sign of strength, do these LPSs, you get in the test, you're waiting 90 days, you get this big 60 or 40, 50% return. And then the hard part is that the average investor, even if they were playing in here, because this is actually a good place to start because it gives you the most time. There's very little room for downside. You can play pretty fast and loose by entering in phase C. And then again, this backup phase is only 12 days before you have this big explosion. Whereas with BAT, one of the plays that I've been in, I took this 20-day buying entry here, where I was positioning myself, see it run, 60%. I only took 20% of my profits here, but now I have had to sit back through while the backup phase comes all the way into the mid of the box, because the backup phase doesn't always just come to the top of the box. It's actually defined by a few more specifics. Like, okay, if you get, you get a little bit more techie, you learn a little bit more about trading. You see the 200 and 314 4-hour moving average here. We found support. And then it's even more clear here on the daily that there's a bunch of supports. And this is what's called the creek in Wyckoff trading. So being able to recognize when we're in these final backup stages, like where basic attention token is now, I think Fetch is in a really beautiful example as well. This is one of my moon plays. You and I were talking back here in July about, we tried recording this video back in July, and Fetch had gone up 157% since then. That was the middle of this LPS phase that we were talking about prior. But now Fetch has been really strong. In the face of today, Fetch didn't move more than 5% on the downside. It's likely that we break out in this channel and we see the same thing in Fetch that we just saw in Tron. Whereas again, Quantum, different trade of mine, here we couldn't get above and we came back down to this longer term support line, very similar to what we saw with Fetch now coming into these support lines. Mm-hmm. So the backup phase is critical that you learn how to identify them, but out in the wild, they're not exactly the same. You get variations of what these look like each time, right? Like Algorand did the same thing that both BAT and Quantum did, which is they're dropping back down to that very big major support line, right? So keeping an eye on these. XLM did the exact same thing. XLM is actually in a falling wedge all the way back down to that support line, right? So getting able to recognize this, because this is 49 days of downward trend. We're like, oh, but this is where you want to be, like starting to initiate your positions is during these downtrend moments in the backup phase, because that's when there's the maximum amount of reward with the minimum amount of exposure. So also the minimum amount of risk for these potential trades.
It's funny because, we always say, right, buy low, sell high, buy low, sell high, buy low, sell high. But it's this weird thing that happens is that your lizard brain or whatever tells you the opposite. It says, oh my gosh, it's red. Oh my gosh, it's down. I shouldn't buy this. This one's going to be a loser. It's going to go down forever. I should buy the thing that just went up 100% because that must be the winner. That's the horse that everyone's betting on right now. So I should hop in too. Right. And it's so interesting because you really have to think counterintuitively to the herd. The herd bought the top on Stellar and is now selling the bottom. Right, and they're jumping into Tron, which just pumped 100%. So don't be that. Don't be the plankton guys. Be the remora. Remember.
Yeah, this stuff is so powerful. Once people get it, I think it's really easy. I feel very confident the audience will grasp this stuff so quickly. You can make an asserted trade, like in our group. I don't know if you've seen some of the comments lately, Lark, but some of the people like, I sleep so well with my trades right now. Like I wake up every morning, and when we see downtrends like this, we're like, more opportunity, not, oh my God, panic. This is more opportunity. Comp man, market man, the whales, they do not spend an entire year building a position just to get like cold feet at the end of this. This is just getting rid of the very last retail traders. And when XLM blows up again, you'll see something very similar to Tron. It'll just go 100-something% of the box. So just to kind of finalize this off, I wanted to show a few that have already gone through and finalized this phase.
Just before you get to that, I just want to ask you one quick question that maybe people are wondering out there is, when you're making these kind of trades, I mean, how are you managing your risk? What's the best way to manage risk in using this method?
So there's a few ways to look at this. It's a great question, Lark. One of the best ways, I think, to start off with, if you're new to trading, is to kind of run fast and loose with no stop loss, but just limit your investment size. So if you're new to trading and you want to try this stuff out, play with money that you're not afraid to lose. Like say you've got $10,000 as an example. go out and try to do it with $100. Get comfortable doing this, because this type of thing, it doesn't, it's going to keep repeating this. We know this has been working for over 100 years. Nothing has changed. It still works exactly the same. So be patient for actually learning how to do it, because once you can do it, you can go up with much higher capital sizes. You can start to play with leverage positions very confidently. But first and foremost, I think the best way to do it is to run fast and loose and without a stop loss, and use your investment size as your stop loss. So whatever you would be comfortable with losing, or say you did the wrong thing, you bought at the top of the SOS and you have to sit for 50 to 80 to 100 days before it comes back up to your entry point. Just play with less capital, because putting a stop loss in here, because of how volatile even the backup phase can be at 28%, you might get pushed out of your position and not remember to re-enter. So the best thing to do here to manage risk, and as you're learning these, is just limit your cap or limit your bucket size. Once you're confident, you can do whatever you want with stuff like this. Like, there's big money to be made in these movements here. But my risk advice would be just to limit what you put in. Don't use a stop loss. That way you give yourself the space to learn, because these do come around. Like this position here in XLM, had I made the mistake of entering in the top here, I could have held through the bottom and see a much bigger, longer swoop return. But whereas, if you play with it again, you get stopped out here, you forget about it, you don't re-enter, and like 3 months later you see it up and you're like, I lost 15% of my you're in too heavy. You want to do what Compman does. Don't worry about the trade. If you've got too much money in there, you'll worry about it. Once you can practice a few of these things without worrying, that's when it becomes really successful for you.
And worse than forgetting about the trade is getting angry at the coin, right? Like, it's a scam. I lost 20% on Stellar. It's a big scam. I'm not buying back into that. It's down 40%. Good. Everyone should lose all their money. And then it goes up 200%, and you're like, the whales again. Understand the game, guys. All right, so Theo, final points here. What do you got for us?
Okay, so the final points are just these larger extensions and where the markets go afterwards. So I haven't drawn up Cardano the whole way here, but hopefully you can see this general trading range, and then a movement outside of the box, this backup period, and a big explosion. Once you see these big explosions, like we saw with Tron, it's going to be somewhere around 100 and something %. These become a longer wave down sequence. So you see this in Cardano as well, where we broke out of the box. We see this with Cardano, you see this with Zilliqa, we broke out of the box, you see this with a bunch of these, Loop Ring as well. I thought I had this drawn up, must be on the other computer. And then Omisego, again, break out of the box, backup range, and these huge explosions. And then look how big they come down. So every time you see a break out of the box, start distributing your shares into that 100% gain, because it's going to come back down, and then likely you're going to see a waves 1 through 5. So the easiest way to mark these profits off, and let's go ahead and do it with Binance really simply here, because it's a trade I'm quite excited about personally, because of their ability to adapt and adopt a lot of these DeFi types of ideas on their new chain. Is I go over here, I grab my Fibonacci retracement tool, I measure from the top of my box range to the bottom of my spring, and what we end up seeing here is actually usually a relationship with my VPR. So my first profit target I put right around here, which is usually top of the SOS, which is around the 30 to 45% mark. This is where I remove any capital that might make me lose sleep overnight, and I just let the rest ride. Maybe for 6 to 9 months afterwards, I'll let the rest ride, because these positions quite often turn into a wave 1, like up 100% sometimes, wave 2, wave 3, wave 4, and a wave 5. So we were at the very beginning of a bull market, very, very beginning. And bull markets, again, not made of retail traders. These are made of the large market interests who drive the price up, and the retail traders get to the table later when you start to see things like Tron up at, like, break out of the box of the few 100%, right? Where you're like, okay, boom, it blows up. You see what becomes a wave 1, it retraces back down for 90 days, makes a wave 2, a wave 3, and so the next 9 months into our future. So on average, what I've been doing is I go up 30%, I take my profits out, and I let the rest ride for the next 200, maybe even 300 days into these highs, because you can see them consistently. Again, if we look in other areas, I'll just quickly trying to show these. Here was Ren on its breakout and its backup. There's a few more here that I had charted up. I think I had them all on this computer. I apologize, Lark. I thought I had more of them on my computer. KNC was another one, came outside the box. Wave 1, 2, 3, 4, 5 coming as well. So again, once we see these big breaks out of the box at 100%, I close a good chunk of my position and I let the rest ride for that around 300 days of the wave ride upwards. Because the big market interest, they just keep pushing these up once they get out of the box, because it's very cheap for them to do so. They spent more money down here actually buying up the last of the supply. For them to get it up here, it's like maybe 100 Bitcoin, and they drive the price up, and it becomes this FOMO. And Kyber Network's the big new thing. They're integrating DeFi now, and then Band had the same. If you chart up Band, here's the backup. We did the same. You can do the same charts with Kava. HBAR is a little bit more confusing because it has this weird drop here, but it's looking like it's going to provide some very similar content. So, Lark, I think the best thing for the audience, like what I would suggest everyone do, is go out. Here's Loopring as an example. You go out, you find a chart, you practice the Wyckoff stuff. You either join our group or you can find it anywhere for free. Here's here's your backup and your explosion outside the box once these things move. So it's really powerful to be able to identify that. And look, about a year, about 350 days on the accumulation side of things at this bottom. This is where you want to get in. And just like we looked at with Binance and a few other the tokens, we're still in these stages. We just left the box with Tron into wave 1, 2, 3, 4, 5 likely coming, but there's still tons of these out there. Binance is a beautiful one. Ontology is really early in its phase D development here, in its early stages of its LPS, not even into an SOS phase yet, like clearly early. So map them out. Watch what these do. And you got if you guys, again, you follow us on Arcane Bear. We try to post as many of these on our channel as possible, just because it helps us keep track of how successful we are in our trading too. Like with Syndicator, this is another great one by one of our Bear family, where again, boom, almost to that 30% target, and then back into the box
that big
range.
retracement comes in again. Yeah.
Yeah, that backup phase is very noticeable. Hey, so once everyone recognizes that, I think it's such an easy way to trade and kind of recognize where you are in the markets. And I just wanted to make sure everyone got to see some of this stuff before we're too late in the market. Because if you can learn this, if you guys can make some sound trades, you sleep better at night, you make more money because of this stuff. Just don't get married to it at the end of the day. Once the targets go up and I start to see, I distribute 70 to 90% of everything I was holding, because we're going to come down lower. And even if we have a big market upcycle again, it's going to provide me more opportunity. So don't get married to a trade. Like, just if there's profits to be had, I take them, I move on to something else. I made all the wrong mistakes in 2017. I was like, stupid Ripple is so not decentralized. In 2016, I almost bought, okay, at this point now, I just diversify. I don't know what's going to do what. So every time I see these trades now, I make an entry, I wait, I take profits, and I move on, because I don't know ultimately who's going to be successful, and neither does Compman. So he invests in everything. So basically just try to be like Compman, because if you can think like him, if you can pretend you have infinite money and infinite time, you will successfully you'll be better at this game than you were.
That's
really
it.
Easily.
That's it, man. That's it. Awesome. Well, Tio, thanks so much for coming on and sharing some of this knowledge with us. It's been, I think, a very educational video for everyone, so I hope everyone's enjoyed it. If anyone stuck around to the end, absolutely. I think there's been so much knowledge shared here, and of course, some really great potential setups. So again, links down below. So check out the Arcane Bear and get some more information on these kind of setups. And he's sharing these kind of setups in his videos all the time, as well as a lot of educational information too. So definitely check that out, guys. Thank you so much, Tio, for coming on.
Yeah, thanks for helping highlight some of this stuff, Lark. I just want to make sure as many people as possible can do as well as possible.